Hi, good morning, good afternoon, or good evening, depending on where you are in the world. And my name is Laurie Kehoe. I am Deloitte's Europe, Middle East and Africa blockchain lead. I'm joined by my colleague, Owen Connolly, who is one of the technical architects in the Deloitte Europe, Middle East and Africa blockchain lab. We're very happy to be here today to have a chat around blockchain. I'm ready to be able to answer the questions that you guys have in your heads and I've been thinking about for a while. So please feel free to jot your questions down in terms of the panel on the right-hand side. We don't have any slides for this session and there's nothing to kind of go through formally. So please feel free to ask questions and we'll get going. I know Owen is also a little pushed for time, so if there are more technical questions or in nature, please feel free to ask those and I'll address those up front. And then I'm happy to cover the more enterprise, business and functional side of the house and those style questions. But to perhaps get the ball rolling in terms of this specific topic and area for today, perhaps I can ask Owen just to maybe shed some light around, I suppose, from a technical perspective, what are the developments he's seeing and the blockchain EMEA lab based out of Dublin is seeing over the last few months. Owen, perhaps you could talk the group through those, if that's okay?
Okay, so technical developments, we're seeing the ecosystem beginning to understand scale. Bitcoin has gone through its scaling conference in Milan, which we were at, and the scaling is an essential part of blockchain because blockchain has to be able to do essentially tens of thousands of transactions a second on-chain, and at the moment it does 5 to 10. We're seeing a good engagement from clients. We're seeing a lot of understanding of blockchain and the ecosystem, the financial ecosystem. We're seeing a lot of interest in blockchain. We're seeing that everybody wants to get some element of blockchain into the system, and we're all looking for the use cases that enable blockchain and allow blockchain to provide a value that only blockchain can deliver, for example. It makes it different to a database solution. Blockchain has unique properties, and those unique properties are what make it special and what make it a thing that can provide unique business opportunities for companies implementing it. Does that make sense, Laurie, or is there anything specific that you're looking for?
No, look, I think that's a really good start, Owen, in terms of the one of the first areas that we got to get to grips with, and it always comes up, which is specifically around scale. So I'm happy that we kind of started with that one. So lots of questions start to flood in here now. So another question that's come up there is around R3 going open source and major banks leaving the consortium. So perhaps I can answer the second part of that, Owen, and perhaps you can kind of cover the first part. So I'll start if I may. So in terms of major banks leaving the consortium, and I wrote a piece that was quoted in the Financial Times a couple of weeks ago specifically on this topic. And I think the way you got to look at it is like this. So R3 is doing a lot of interesting work. It's dealing with 70 institutions around the world, which is quite a large number to be dealing with. So it's under a lot of pressure in order to deliver on multiple projects. So the last I heard, there were over 30 different POCs going on at any one time. So I've been, I guess, a project manager and a program manager for 10 years, and I don't know how I would work on a project with that many clients and also that many high-profile and demanding clients. So when we have the likes of, I guess, Goldman Sachs were in there and other big institutions, they're going to have very high expectations. So definitely they're going to have some very good project and program managers trying to deliver for those high-profile clients. But more specifically, why did they leave? I think for me on this is that, look, these guys, if we look at Goldman Sachs, they have more patents or patents around blockchain technology more than any other institution in the world right now. For me, my 2 cents is that they probably said, you know what, we're doing pretty good on our own. We have an understanding as to what R3 is about, and I think we can do this on our own. And maybe they're going to go off now and kind of set up mini or smaller groups with other entities. But effectively, what I wrote in the article in the Financial Times specifically was about, you know what, some people want to work on very specific use cases and only want to work with 2 or 3 other institutions so they can move forward faster, they can focus almost laser-like. And then also, if they create, or certainly in their eyes, when they create the next internet or the next platform for their specific business, they will be able to profit from it. So instead of having 50 or 60 friends involved, if there's only 2 or 3, and we're beginning to see that with some of the asset managers starting to come together. We saw, I think it was Amundi, which is part of Credit Agricole, and a couple of the others, Henderson's, I think, another asset manager. They want to create the platform, they want to own it, and they want to monetize it. They want to create that platform so they can make money. So certainly for me, the reason why we're seeing is that some of the more advanced institutions like Goldman Sachs, or then in Europe we have Santander who've left, which is pretty interesting. Once again, they're pretty far along their blockchain journey. I'm pretty sure they know where they're going and where they want to get to. So really at this stage, is there a benefit in them being part of that specific consortium? So Owen, perhaps I can pass over to you. In terms of R3 going open source, what do you think about that? I know we were talking about it earlier.
I believe for blockchain and blockchain associated projects, open source is part of the ecosystem. Blockchain's properties around transparency, for example, and around gaining a shared level of trust mean that you need to know what code you're running, you need to know what the code base is doing, you need to be able to see it, you need to be able to prove that the code base that's running is the code base that everybody is running, and to do that you need to open source. Otherwise what you have is you have a potentially untrusted part of the chain. So the blockchain platform itself is open source. If you're running a web platform on top of the blockchain platform, ideally it should also be open source, so that people can validate and verify it and gain an objective level of trust in the technology that they're running. So open source is completely part of the blockchain experience as it were.
Okay, thanks, Owen. Another question has come in there. In a world of interbank blockchain, what is the added value of each participant? So, look, I think this is a really good question. I suppose the whole technology is around sharing information. It is a shared ledger. It is a network technology. So where the value added piece of each participant is that through consensus mechanisms, the more people that are part of that ecosystem and part of that specific blockchain, the more valid technically the information should become, because in order for the data to be validated by each participant as part of the consensus mechanism, therefore the more people there are to validate the information, the more correct it becomes. So there'll be therefore more people to review the set of transactions that are about to be processed and added to the blockchain. So the more people, the safer it becomes. And it's kind of back to that adage, and we have a specific Deloitte as a blockchain video on this. It's kind of strength in numbers kind of approach to blockchain. So the more people have to review, the more people have to reach consensus on the data that's being added to the specific blockchain. So I think that's a really good question. Thanks for answering it or asking it. The next question up we have is, can all industries really use blockchain, not just FS? And the answer is, well, technically speaking, the answer is yes. And what I would say, though, and I think that a healthy amount of skepticism has to be applied around the technology because there's so much hype around it, is it would depend on the use case. And I'm very conscious saying, as a management consultant, saying the words, it depends. I think we probably say that a bit too much. But certainly it will depend on the use case. So, for example, in the automotive industry, we've seen applications of that in terms of specific parts of the car being tracked. We could also see that within the aviation sector. Could certain assets or parts of the plane be tracked? Absolutely. So the aviation, super regulated industry, and it's really important that everything has to be tracked, everything has to be kept up to date, maintained, and record-able, and information has to be shared with all the different participants. So that's really another example. I think if we look in the health sector, having e-health records or digital health records, that's another key one. We also have voting. So at a public service level, I suppose how votes are stored on blockchain. So there's full transparency of every single vote that's cast within that election, and full audit trails can be done in a really, really quick way. Owen, any other thoughts in terms of other industries, not just FS?
Well, if you're a blockchain zealot, it's easy to believe that every single industry can potentially be replaced or augmented with a blockchain. You give examples of the health financial. I mean, anything that involves a shared store of information or a shared state between entities can be replaced with a blockchain. An example might be to take gigantic platforms that we have in the the car rental space, for example, with Uber or Airbnb, there is sort of no reason in a hypothetical future where those abilities could not be handled by a smart contract because they're operating as a sort of a middleman service between entities. So, for example, the Uber, with the Uber type example, a request for a taxi could go onto the blockchain. The taxi driver could accept that request, again confirming on the blockchain, and they could come to you. That the entire transaction could be registered, value could be transferred on the blockchain. The possibilities literally are limitless. When we move into items such as Internet of Things, the ability to store state on the blockchain. It becomes another gigantic capability, as well as the ability for blockchain to provide authentication. There's one thing it's important to remember about blockchain is that because there's an identity behind each of the transactions that's sort of cryptographically secure because it's a part of a PKI, a public-private key pair. The ability to, for example, lock ownership of an Internet of Things device down to a particular private key could mean that in the future, Internet of Things devices couldn't be the gigantic security nightmare that they are at the moment. So blockchain absolutely has lots of potential use cases outside of just the pure value transfer use case that exists in financial services. I'm sorry, value transfer and store of value. The ability for smart contracts to execute code means that potentially any activity done by a computer could potentially be replaced by a blockchain. I say potentially because we're a long, long way from having a gigantic world computer where all code is run on a single source with a single shared state between everybody. But absolutely, blockchain's uses are effectively limitless while massively constrained and limited by where the technology is at the moment.
Okay, thanks, Owen. And I think for the person who asked that question, it'd be great to understand what sector and industry you're in so we can give some more examples that are relevant for you and anybody else on the call. So please feel free to let us know the area you're working in, and we'll do our best to give you examples that we know of where blockchain seems to make sense based on our understanding as things stand. So look, another question has just come in there. So doesn't it mean an explosion of data? Million of duplicated data elements looks like an enormous redundant solution. Okay, and this is a good question, a good point, right? So there is definitely going to be, I guess, there's going to be lots and lots of data, right? But here are some of the, I guess, the key advantages of what the technology can do. So number one, it provides against a single point of failure. So this is probably a key point. So whereby if there are multiple instances of a database, it means that if there is one single point of failure or honeypot, well, then there's one single point of attack and everything goes down. But if there are multiple instances of that data set, well, then you need to reach over 50% of those data sets in order to corrupt or hack that whole blockchain for everybody. So I think it's a really important point that with blockchain, where there's multiple instances, it actually provides against a single point of failure. That's probably point number one to that question. Point number two is that what you have in a blockchain is that every single transaction and or interaction and whatever else we want to record on the blockchain through the hashing mechanism is stored there and is burned in forever. So the information is there. It cannot be undone. It cannot be amended, and that's it. So it's a really valuable store of information, as I think Owen was touching on a second ago. So definitely point one, and point one was around, I suppose, no single point of failure. Point two is an audit trail, and point three, blockchain technology lends itself well to effectively share information on a much easier fashion than traditional database technology. So if you're setting up a blockchain with one node, it's actually very simple to set up multiple other nodes on top of that, and very quick to do so. So that's another key advantage of the technology versus traditional database technology. So hopefully that answers your question. Oh, and in terms of the data element of that question, what are you seeing from a technical perspective as more data is going to be recorded and how that's going to work? Do you have any thoughts on that one?
Yeah, I do. There's a lot happening now. I've just seen a request coming in that I speak slower. I assume the reference is to me. I tend to talk very quickly. So there's a question around the duplication of data and around the potential inefficiencies in storing this data across every single node. And yes, it seems like an inefficient action to, for example, if you have 10,000 nodes that each node stores, in the example of Bitcoin, it stores the 80 gigabytes of transactional data. I suppose the first point is 80 gigabytes is not a gigantic amount of data to store in the modern world, and the second point is that scaling as scaling requirements become more important, the amount of data that we're going to store is going to increase. So, for example, if you look at a curve of the Bitcoin blockchain, it's effectively doubling every year. It's an exponential growth curve. So next year, there's going to be an extra 160 gigabytes of data in the year after that. It's going to be 320 gigabytes of data. And yes, there is a point where you're dealing with terabytes of data, and to start a new node for a blockchain involves downloading a terabyte or 5 terabytes or 10 terabytes of data. So yes, so it seems massively inefficient, but there are solutions that are well established in the IT space for dealing with gigantic amounts of data. And this week, in fact, Vitalik Buterin of the Ethereum Foundation published a white paper on their intention to scale the Ethereum network using sharding. So essentially, you wouldn't need to store the entire chain. You wouldn't need to store every single piece of data. You would just store a part of it, and you would validate that part of it. So there are techniques around data management that have additional complexities, because in a blockchain you want to make sure that they're secure, and because there's money involved in transactions, that security is paramount. And whenever there's money involved, there's a sort of a desire by other parties to try and get that money. So bad actors become a thing that you have to constantly be aware of through game theory and through cryptographic strategies. So I suppose to try and summarize that long response, yes, it is slightly inefficient. The data we're talking about now is not gigantic amounts of data, and there are techniques such as sharding to try and reduce the data load on every single node in the future. Ethereum's end goal, for example, is to try and have this technology running on a device. It's running on a Raspberry Pi 2 now, for example, but I suppose it's to have it running on things like a connected light bulb or a pair of shoes or whatever else is connected to the Internet of Things. Does that answer the question? I think it does. I could probably go on for a lot longer, but I don't want to.
No, we have a number of other questions coming in there. I also wanted to make a clarification. Owen and I are actually Irish, not Brits, as one of our American.
Please, thank you.
Callers has just outlined. So they're definitely our neighbours and friends, but just to be clear, actually we are Irish. So I don't know if that makes things better or worse for everybody on the call. I think it's probably me that was speaking too fast as well, Owen. So look, apologies to our American friends on the call. So look, some other questions come in here. So an interesting one: which opportunities and obstacles do you foresee in leveraging blockchain in the intellectual property digital content industries? So for example, B2C streaming music, B2B stock, and photography and so forth. So look, my kind of thoughts on this one is that, and this is a really good question, and thoughts are that effectively this is going to come down to, I guess, to legal matters. And this is where lawyers are starting to get more and more involved in terms of the technology itself, and are actually starting to attend a lot more conferences on the technology. Because as we begin to write contracts, obviously they're going to be legally binding. The lawyers need to understand what those contracts are, and as those contracts are written, there are going to be legal ramifications from those. So everybody's going to have to become a lot smarter in terms of almost what the smart contracts are, how binding they are, who they impact, what they mean to everybody. So I think the way we've spoken about this before, is it going to be the case where, technologists need to become lawyers, or lawyers need to learn how to code? And an interesting example of this, if we look at BlackRock, for example, that organization, the big fund manager, so they have a huge amount of money, hugely successful, and their COO has come out and said that actually what he wants is that every single person in the organization needs to be able to code. And BlackRock, the fund manager, actually has their own programming language. It's called BQL. So rather than, let's say, if you're working in a day job and you want to make trades, and there are certain limits and thresholds that need to be applied, rather than picking up the phone and getting in touch with someone, let's say in an offshore delivery center in India, where that change needs to be updated, actually what the expectation in the future is that everybody in the institution is able to make those changes themselves and instantly. So there's no time delay in terms of how long it's going to take to put that threshold change in. So for me, the answer on that one is the obstacle is absolutely legal, but then the opportunity behind that is also what countries are looking at this right now, and what countries are going to lead the way in that space. So instead of people going, oh, then it's legal or it's the regulator, there are countries around the world which are progressively looking at this and looking to put it into law. So it will make things easier when it comes to smart contracts. So if we look at Hong Kong, for example, if we look at the Hong Kong Monetary Authority and the work they're doing in terms of blockchain technology, it's pretty amazing. So they've developed their own proof of concept, which is more than some financial institutions. They have 2 more in the pipeline. So the one they've done already was around mortgage surveys. They're doing another around trade finance, and they're interested around smart identity. So I think it's pretty interesting to see how progressive, I guess, some entities, some countries are, and who are turning, I suppose, the technology very much into an opportunity as opposed to a threat. So that's certainly kind of my 2 cents on that one. In terms of music, and look, this is something that's close to Owen and my heart. Ireland's a small country and we're pretty passionate about our music over here, but it's a great opportunity to use technology in order to legitimize and claim rights to what you produce, whether it is a song or whether it is a photo. So for me, I think this is a really interesting use case, and it's actually something that we're speaking about in Ireland next week to some senior officials about. So I think that's a great question, and hopefully we've answered it. Happy to answer some more questions specifically on that topic. So I'm going to mark that one as closed for now. In terms of, Owen, in terms of how many transactions can a block have, who decides that? And I see some blocks of 10 transactions while others have 40. What are your thoughts on that one?
Okay, so that's fairly easy to answer. In the case of Bitcoin, for example, Bitcoin has a very, very hard block size limit of about 1 megabyte. What I say about is because some miners are running a particular form of the protocol where they can go maybe 20% higher, but that's a minority. And 1 megabyte means that every single transaction that you want to have has to fit into a megabyte, so you're going to prioritize the number of transactions that have the highest fees, for example, transaction fees, and that are small. So, for example, if you have one transaction that has, say, a megabyte of data as a payload and is giving you 2 cents, then you're going to prioritize having 50 transactions that also give you 2 cents, right? Because you're going to get more money. In the case of, so that's Bitcoin's thing. Bitcoin has also had a gigantic internal discussion with the Bitcoin developers over the last year or so around scaling Bitcoin through increasing the block size. So the block size was proposed to increase to 2 megabytes, and that has effectively died now. So Bitcoin, and also when you think of scaling, yes, you scale it to 2 megabytes, you can do twice as many transactions. So you might go up to 14, 15 transactions a second, but there's a certain point where scaling doesn't get you, doesn't the size of each block and the data transfer problems and so on, it don't scale with it, right? With Ethereum, for example, it has a slightly different mechanism for the number of transactions that can fit into a block, and it has a gas limit, gas being the fuel that essentially the Ethereum network runs on, with gas being used to execute a CPU cycle effectively. So it has a gas limit, data uses gas, CPU cycles use gas, and that's the limit they allow. About, I think it's about 4 million now that the state has been cleared. So that's the limit that they use for their block size, and Bitcoin uses just the data actually inside each transaction. So hopefully that answers it. Why 10 as opposed to 40? It's possible those 10 transactions were storing more data than the 40, and it's possible they're also paying sufficient fees to be able to have a miner actually put those transactions into a block. So it's widely variable, and that's just the two main players, Bitcoin and Ethereum. And blockchain is the sort of the underlying technology. It's not the particular implementation. So I think we can probably address some of the other questions that are talking about blockchain as opposed to there's one from, apart from Bitcoin, which other application use blockchain. Do you want to take that one, Laurie?
Let's move on to, there's another couple of questions here. I want to get your thoughts before I know you have to run, if that's okay. So blockchain is an open source protocol. If we need to use this open source protocol, whether the users will be able to do that and tweak to their requirements. So Owen, from a technical perspective, what do you think of that one? It's
not really a limitation. blockchain is open. So, well, Bitcoin is open source, for example, and if you want to interact with Bitcoin, you have to interact with Bitcoin the way it expects. But I mean, it's a natural constraint. If you want to interact with HTTP, you're not going to write your own HTTP protocol and then interact with HTTP using your protocol. The same for IP or TCP/IP or something like that. Yeah, you're operating within the constraints of the protocol, within the data that it stores, its transaction limits, and so on. But I mean, outside of that, what you do to interact with that is entirely under your control. I mean, HTTP enabled the internet and enabled websites and applications and mobile devices and everything else. Well, you know, TCP/IP is in there as well, and cell technology. But the protocol itself is essentially just the technology that enables it. It's not a limiting factor from the use cases and what you can do with it. It's a natural constraint. Does that make sense?
Hi, it does.
Yeah,
Thanks,
yeah.
Owen. Okay, super. So next question. Apart from Bitcoin, which other application uses blockchain? So I think you kind of covered that one already, Owen, right? So we spoke about Ethereum. We've spoken about a few others as well. Any other thoughts on that?
Yeah, I mean, I suppose it's the Bitcoin and blockchain tend to be tied to the hip when people think of blockchain. Maybe they know enough to think of Bitcoin, but blockchain is essentially the sort of the mechanism where the transactions are put in a block, and then that block is linked to the next block and linked to the next block in a chain. That's the name that's been given to the sort of technology. Ethereum uses the blockchain. Bitcoin uses blockchain technology. Bitcoin is essentially the first of the blockchain technologies. But the actual implementation, that mechanism of chaining one block of transactions to another block to ensure integrity, is essentially now available to everybody. It was a new idea built on several other ideas, but now this new idea is available to the world. So we're going to see an enormous amount of blockchain technologies and an enormous amount of blockchain platforms that are not necessarily Bitcoin and Ethereum. There's going to be other ones, but they're going to use this technology. So they're the same but different. It's I can't think of a good analogy off the top of my head.
No. Okay, M&M.
Yeah, it's like cars and Ford. Yeah.
Okay. Great. Look, another question here. Benefit of blockchain in a supply chain is removing or reducing the middlemen and hence reducing costs. Okay. If only one provider is used for a specific blockchain, say for SWIFT payments, e.g. Ripple, doesn't the network become beholden to the fees of that provider and hence becomes a monopoly? So look, I suppose the short answer to that is, well, yes. Isn't SWIFT already a monopoly holder of that whole system at the moment? So effectively, I think what you're seeing at the market is a number of different entities all trying to create the next internet. And whether that is through a blockchain or through another technology, that's what everybody's trying to do, to create the next platform that they can own, that they can run, and they can charge people for. And maybe it's on a per transaction basis rather than a typical subscription model. And that's probably an interesting change from a fintech perspective that we're seeing, is that, you know, business isn't always going to be done the way it's done today, and people who are moving more towards that kind of platform approach or percentage approach or percentage of transaction fee or something like that. And so to address the SWIFT question, I think SWIFT are kind of in a monopoly position at the moment. They're actively looking at blockchain. Please feel free to Google SWIFT blockchain and the work they're doing, but they're being super active. And why are they being super active? I suppose because they see blockchain as an opportunity and as a threat to their business. So they see it as an opportunity to create a new platform to help them stay relevant. This is the thing that we keep on hearing from our clients. Laurie and Owen, you know, how do we, in light of all this kind of fintech change and blockchain change that's potentially going to disrupt our business, how do we stay relevant? It's something that we keep on hearing over and over again. And the key thing is around this is get active, start exploring the different technologies, start doing stuff as opposed to doing nothing. That is the worst thing you can do. So SWIFT are actively working in the blockchain space, and I expect them to make some announcements, I think, 2017 on that in terms of the work they're doing. So, and I think there's already some announcements out there. So I think, you know, they're trying to remain in that monopolistic position they're in, and they're afraid that some others, some others are going to beat them to the punch unless they act and move quickly. So hopefully that kind of answers that question. The next question up.
One. Sorry, Laurie.
Go ahead.
Swift's an interesting one. Swift does about 300 transactions a second. So right now there isn't a public blockchain that could actually replace Swift from a messaging perspective. And yes, Swift are obviously working on the blockchain replacement for Swift because they have all the customers, and for them it's an easy thing to go to, Swift 3.1, which has blockchain, because it's just a technology change underneath the background. The functionality is the same. I have to go very, very shortly, Laurie, so is it possible for me to take one or two of the slightly more technical ones that are there?
Yes.
There's
what's
a question
the top one, Owen?
I would say, okay, so there's an interesting one of peer-to-peer, which I'll go through in a little bit more detail than this one, which is, will blockchain replace databases as we know them today to be a de facto data store? I think yes and no. I think some databases will be replaced with blockchain. I think blockchain provides an interesting mechanism to allow you to trust data inside a database through things like storing hashes of hashes and so on. But for example, databases have amazing properties. We have data warehouses where you can retrieve data very easily. We have databases that allow indexing of billions of rows. We have NoSQL databases. We have lots of very interesting databases, and a blockchain right now is a kind of a limited, slightly poor database that has a property that databases sort of don't have. It has this immutability. I mean, there are databases in the big data space that also have immutability, so it's not quite there. But so I would say it will replace some databases, but and potentially if it scales and blockchain can do tens of millions of transactions a second on chain, and we have everything sharded over 1 billion mobile phones, and people are occasionally validating a tiny amount of transactions, and everything just runs massively distributed, then yes, blockchains could replace databases, because we would be storing data in the blockchain as a data store. We would be storing databases on distributed databases on a distributed file system, which has its index stored on blockchain. So the capabilities are gigantic, but databases right now are they're dear to my heart. I spent 20 years developing systems with databases, so I do really like databases, and blockchain are not databases per se, and they're not as capable as at certain activities as databases. I'll take the question on peer-to-peer.
It sounds like a game show, Owen. Jeopardy.
What is peer-to-peer? So the question is, my current understanding is blockchain allows to move from peer-to-peer, from peer to platform to peer-to-peer, so removing the middlemen. And it is saying potentially, isn't there an intermediate, isn't there a middleman? It's like a semantic question to say that there isn't a middleman with blockchain, and or is a middleman, because you have to accept that a blockchain such as Bitcoin, for example, to use as an example, has miners, and those miners are running servers doing mining, and they're providing the infrastructure on which the payments are actually being made. So yes, there's a middleman in that miners will request some transaction fees. You can decide not to pay the miners, and your transaction might take a little bit longer. It could take 6 hours if the network is busy with transactions that are willing to pay money. But the difference is, I suppose, that there isn't an organization that's managing the platform. It's distributed among a group of people that have an interest in the platform, but it isn't a single organization. So I suppose that's the key part of it. That's the part of it that makes it peer-to-peer. It's one person. Like when you transfer Bitcoin to another person, you're transferring Bitcoin to another person over essentially a large uninterested network that just treats this as yet another transaction that potentially gives them some money. So it's a very new and interesting idea, and if it can disrupt financial technologies as much as BitTorrent managed to disrupt and annoy the music and movie industry, then the potential is gigantic. Okay.
Oh, and thanks for your time. I know you got to run.
Yeah, I got to run, guys.
No problem at all.
It's been very good. I've enjoyed it a lot. Thanks very much. I look forward to hearing the rest of the discussion later. Right. Thank you.
Thanks, Owen. It's been emotional. Thanks.
Bye.
Bye-bye. Okay, great stuff, everybody. So look, things have just gotten whole lot less intelligent now that Owen is gone, and it's just me, Laurie Kehoe left over. So a couple of questions left to remain. So what cost reductions can we hope for by marrying blockchain tech to a risk financing mechanism for insurance products? Okay, so I guess the whole thing around this, if we look at it in its plainest, is that it's all about information sharing. This is the whole thing, especially around insurance, and we're seeing this specifically at the moment. In Ireland, is that basically in the motor insurance industry, the cost of quotes in motor insurance has gone up by, I think, almost 50% over the last 12 months. So it's a big problem. And the whole thing is, and what we're trying to really put forward as an idea is that information needs to be shared between the insurers in order so that people can effectively be profiled and risked based on their history. So in terms of how information is shared between insurer A, insurer B, insurer C, if they have a fuller picture as to a potential customer's claims history and so forth, then they can obviously price accordingly based on the history that the consumer actually puts forward. So I think for me, that is a key thing. It's information sharing. And what we need a technology which allows you to secretly share information. So how do I share information? Perhaps there's a kind of a concept called zero knowledge proof, where I can share something with somebody else, they can validate it, but they don't get to see the data within it. So it's worth checking out. So zero knowledge proof. So hopefully that's kind of one area around cost reductions. But effectively, if you share information, you'll then be able to have a richer view on what the customer is, who they are, what the background is, and therefore price accordingly. So if you are a low-risk customer potentially in the insurance industry, you've never made a claim, well then effectively it should be priced as such. And instead of paying the whatever it is, $800 you're paying at the moment, perhaps you're actually more like $400. But that information needs to be shared, and this goes against the way insurers and the insurance industry works at the moment, because what they do is they have lots of really amazing data on all of us, and what they do is they try and hoard that information as best they can, because that's their differentiator. The bigger the data set that they have, the more sensitive it is, the more they want to hold on to it and not share it. But actually, if they share it or work together, let's say it's AIG and Allianz working together, they're going to have huge amounts of data that they're able to then perhaps use to target specific customers, target hundreds of customers at a time with a very set rate based on who they are, the age, where they live, etc. So I think blockchain and insurance is a super exciting area and one to watch. So hopefully that kind of answers that one. The next one, so how do you introduce blockchain to big companies with existing procedures? Very good question, and I feel passionate about this one. Why so? Because it's tricky, it's not easy, and you've got to be able to explain blockchain very easily. And you got to take people on that journey with you. And you got to start almost from the top. You got to be explaining to the C-suite what it is, what it isn't, what are the examples for that specific industry, their sector, who's doing what are their competitors or competitor financial institutions doing. And you got to be able to explain it so people leave the room fully grasping the fundamentals. Now, we don't have to get into the bowels of the consensus mechanisms and all that kind of stuff. And in fact, I think if you go down that road, it's actually not the way to go. If you think about it, today, do people understand how the internet works? The answer is no. Do people care how the internet works? Very few. It allows us to book our holidays quickly. It allows us to buy our groceries online. It allows us to have great experiences. And that's what the internet has done. And blockchain technology will also facilitate. It will enable us to do things that we're currently not able to do today. So whether that is from a know your customer or KYC perspective, that if you upload your documents into a single repository or a single entity or company, and they're then validated and stored. So when you go to open a bank account, that bank can then reference that utility where that information is stored. So you don't have to resubmit documents all the time, or you want to buy into a fund, you submit your documents once. And I get it, once is fine. You got to do it once to make sure you are who you say you are and you're legit. But if I want to go down the road then to another, I guess, fund provider, do I have to submit my documents and do it all over again? If so, that's a terrible customer experience. Why do I need to do it all over again? Why can't I just do it once and the second entity refer to the first entity that's already done my KYC? And then I'm actually accessing funds and buying financial products way faster, way easier. And that's more exciting to me. And that's the way the world is moving. The way, if we look at it from a millennial perspective, the way the world works is and moving towards are three things, and it's really simple. So it's free, perfect, and now. And the examples of that are, if we look at if we look at WhatsApp, is a great example of that. It's almost free. It's pretty perfect as a messaging system, and it's available right now. If we look at WeChat in other parts of the world, if we look at Snapchat in the US, and I know Snapchat's all over the world, but if we look at Snapchat for the pull that thread a little longer, it gets really interesting, especially when they've moved into Snap Cash. So these platforms are now becoming, I guess, payment tools, payment mechanisms, and they'll move into something else again. And that's why this shift to platforms is a big movement, and that's kind of the revolution for me that's going on at the moment. It's the formation of big platforms, and then lots of ancillary services can be provided around them. So hopefully that answers that question. A couple other questions have come in. So I'd go back to this. How do you introduce blockchain to big companies with existing procedures? Look, really tricky is the answer. Make sure you know your stuff, can explain it to your mother or your girlfriend or your boyfriend or whatever it is, and make sure you can explain blockchain at that basic level. I'm happy I'd look online for good videos that you can use to help tell your story. But the key thing is, with blockchain technology, it's not an incremental technology. It's not about getting kind of 1 or 2% gains. And there's a good thing that's going around LinkedIn at the moment, and that's kind of, we didn't invent the light bulb through incrementally improving candles. Blockchain technology is kind of like that. It is revolutionary. It's transformational. So if you're looking to get a 1 or 2% efficiency gain on the process that you've got, blockchain probably isn't the solution for you. Blockchain is a transformational technology, and the key thing about it is it's like almost if you were to start drawing your sector all over again, who are the participants, who are the actors, how do they share information, how do you reconcile, how do you settle? You wouldn't draw the system the way it is today. It would be fundamentally different, and blockchain technology is definitely one of the technologies which is going to help enable you to create that new system, that new approach, which is going to look really different to the way it looks today. And when you do that with anything in life, when you're making that change, it's going to be uncomfortable. It's not going to be easy, and it won't be accepted by everybody. But you've got to keep pushing that agenda to show, why don't we do things like this? Why don't we? Why aren't things easier? Why can't we actually redesign this and reimagine this? So in our Deloitte EMEA blockchain lab based out of Dublin, what we actually have is as you come in the door, there's a line which I really like, which I put up, and it's get comfortable with uncomfortable. And it's a key point. So we're going to challenge the way you work, the people, the processes that you have, the procedures that you have, and really test, why are you doing that in that way? Why can't we make this easier? And what's the right technology to solve that problem? And sometimes blockchain isn't the right technology, by the way, folks. Sometimes there are other technologies that are more suited. So hopefully that kind of answers that question. I really feel passionate about that one, so forgive me for going on a little bit. You say it's peer-to-peer, however, Bitcoin's core devs are just 5 people. Surely this is essentially an unofficial middleman government. Look, that's a bit of conspiracy theory going on there, I guess. I don't know really what to say about that. They're definitely, I actually don't know what to say. I think Owen was probably better placed to answer that question. I don't know. An unofficial middleman, potentially. Government, I tend to not agree with that. Unofficial middlemen and women, for that matter, working together, quite potentially. They've done a pretty good job over the last, how many years? 7 years in kind of guiding the technology to where it is. Obviously been around since 2009. No single successful attack on the Bitcoin blockchain. Everything is still intact. So whomever they are, they're doing a pretty good job, and I guess they are playing the unofficial middleman role. But as long as the key thing is, as long as they continue to act in the way they're doing, I think the global community on the technology is going to be pretty happy with it. So hopefully that kind of addresses that one. Other question: can blockchain help me with my present clients in India? Maybe is the answer. It would depend on the specific problems that your clients in India are facing. So I think this once again comes out where the technology is it's going to solve all my problems, no matter where you are. The key thing is this: what's the business problem you're trying to solve? And then what you've got to do is, and happy to help, is how do you create the business case for the technology to solve that problem? In the sense that, and what I mean specifically on this is, be very clear on what the business problem is. Do your homework like any other technology and challenge that's out there. Be very clear on that. And the second part is, okay, what are the technology solutions that are out there to help address that problem? And there's probably going to be a few. So maybe maybe it's a Salesforce solution should be looked at. That's kind of option one. Option two might be a blockchain solution. Maybe option three is an Oracle solution. And they all have their merits. They all have pros and cons and need to be evaluated as such. And so I think it's actually great that the technology has come along so much over the last kind of 3, 6, 9, and 12 months, that it's going to be compared against those technologies. And we are doing that right now at the moment for some of our clients. We're evaluating solutions that are blockchain-based against some more traditional and tried and tested technologies. But you've got to be practical with it. And there are times when it makes sense, and there are times when it doesn't. But you've got to do the homework and analysis. There's no shortcut around that. And it's definitely not going to solve everything, and it's definitely not the right choice all the time. So what is the business problem you're trying to solve? Be really clear. And then what's the business case for using whatever the technology is? And if it is blockchain, great, but be able to be very clear as to why it is better than other technologies, why it's safer, why it's cheaper, why it's faster. And in certain circumstances, it is all of those things, but it's not all the time. So that's probably what I'd say there. Business problem, business case. What is the business problem? What is the business case? So I'm going to close that one as well. Okay, so which type of user interface is mostly used currently for services running a blockchain, standard website, mobile apps? So to be honest, both is the answer to that one. So depending on what the client wants, but typically nowadays it's all mobile, it's all tablet. So the way we usually do it is we actually kind of do it for kind of all three mediums there. So we'll have a website-based solution, we will have a iPad or a tablet-friendly solution, and then we'll have a phone-based solution. And that is actually where a lot of our work goes in. So like any project, what we're trying to do, and this is, I'm sure everybody feels this on the call, what we're trying to do is create great customer experiences, and typically they're consumed at a digital level. So blockchain will provide the benefits in the back end, so probably not that sexy kind of stuff, but it's the front end where the story is told, where the customer feels the benefit, and instead of them, having to ring somebody up, they can buy a product, let's say, in 5 clicks or less. And that's the goal, and that's going to be consumed on a digital front-end basis. So we have a number of people who are now part of our blockchain lab that are user interface or front-end specialists, because it's vital to get the front-end right. It's absolutely vital. If there's a bad experience there, it doesn't matter what you did at the back end. It doesn't matter how good the code is, unless the customer or the client is feeling, you know what, this is better than what I had yesterday using the other solution, then we've missed the point. So I think it's a really good point, and it's really critical that we get the front end experience right, because ultimately that's what we all use. And once again, if you go back to kind of WhatsApp, if you go back to Uber, and we go back to other apps that we all like using, they have really good, easy experiences. And that's what the technology should be facilitating and enabling. So, okay, good question. Next up, can the party starting a blockchain be trusted? Some party has to initiate the blockchain. Is it possible that they provide a system that is possibly fraudulent? Yes. So very good question, and the answer is, well, yes. And this goes back to the legal side of things. So let's say all 81 of us, or 82 of us that are on the call at the moment, if we were all to participate in a blockchain, probably not dissimilar to R3's consortium, so if we're all to participate right now, we'd all have to sign up to the agreed terms and conditions of that specific private blockchain, as to how it behaves, who does what and when, who can let people in, what the consensus mechanism is, all that kind of stuff would have to be agreed. And that would require, certainly if I was involved anyway, and I imagine everyone else is the same, you know what, especially with people who haven't worked with very much before, well then we're going to have to get lawyers involved, and we're going to have to get contracts signed. So if there is something fraudulent, well then I guess maybe someone's going to pick that out in terms when they review the contract. Maybe it says Laurie owns 99% of the transaction fees from the blockchain in the future. So if that's fraudulent or people don't like it, well then they can call me up and don't have to agree and don't have to sign up. But if they do sign up and they do agree, well then they've agreed to those terms and conditions. And unfortunately, that's people not reading the small print and agreeing to things that perhaps they didn't read. So I think it's a really good question. And the way to do this stuff, guys, is read the small print, read the contracts. If you're not a lawyer, get a lawyer to review contracts in this space and in general as well. I think it's a a thing that people rush over is kind of sign things way too quickly without fully understanding. And then we get into the kind of whole world of smart contracts. Do we know what's going on in terms of smart contracts? And this is where we're back to the legal area, where we need lawyers understanding code and the technologists becoming lawyers. I'm probably speaking to a couple of people on the call who are both of those. Unfortunately, I'm probably neither, so I've got a lot to learn. So hopefully I'll mark that one as closed as well. Okay, so wow, very long question on the next one, so bear with me. So guys, basically we've got about 5 minutes or so left. What I hopefully can kind of encourage people to do is kind of ask a few more questions around where the technology potentially is going in their part of the world. What's it going to take to move forward? What are the predictions for the coming weeks and years? So another question there. So which couple of existing mobile apps would you quote as being current examples of great UX front end running on blockchain? So one example I can give you is around, there's a blockchain company called Settle, S-E-T-L. It's a UK company. And it has partnered with it's partnered with Metro Bank in the UK. And effectively they're doing contactless payments using their card, and all the information is processed and recorded on blockchain technology. So I think for me, they've got a pretty good front end, and they've also got a good back end story, because what they're trying to do is obviously, how do we simplify payments? How do we make them cheaper, faster, and potentially safer? And also, and blockchain's at the heart of that solution. So perhaps check out that one. So Settle is the name of that company, S-E-T-L. Are there any others that come to mind that are particularly interesting? That's kind of certainly the top of the list. I think there's probably another interesting one by Deloitte called Smart Identity, which has got a pretty good front end and front end. So it's around how we create a digital identity, which can be shared with different governmental departments and entities. From a blockchain lab in EMEA, based out of Dublin, we're going to be launching 2 new prototypes, which we'd be happy to share demos with on a later call with this group, live demos of the solution that we've built. One is around regulatory reporting. How do we make that easier? So hopefully we've been working hard at making that front end look good. And secondly, also around know your customer utility. So how do we create a utility whereby you submit your documents as to who you are, your passport and utility bill, and then effectively, if you want to open a bank account with Bank A, you ask Bank A to refer to the utility in order for them to determine that you are who you say you are. If you want to open another bank account with Bank B or Bank C or Bank D, you ask them the same thing. You say, guys, I've already got all my details. I'm legit. Refer to the utility. And effectively, the solution for the utility, or the technology solution for the utility that we're putting forward, is going to be blockchain-based, and the prototype that we've developed is specifically focusing on that. So how do we make it easy for customers? Back to the kind of free, perfect, and now, and better customer experience piece. How do we make it easier for customers to access different financial products, different financial institutions? Okay, so bear with me here. Flood of questions coming in there. Okay, hello, and thank you for sharing your insights. Could you please talk a little more about the type of work that you're doing in your lab, and maybe some achievements so far, or current developments, as much as you can disclose? Okay, so hopefully, Hicham, this one's for you, as they say. It's a very good question. Yeah, look, what we're seeing at the moment, and I think kind of high-level summary would be 2015 was the year of hype around the technology. 2016 was the year of the prototype, which is coming to an end. We've got about a month left. And 2017 is going to be the year of the pilot. So the work that we're requested to do on an increasing basis out of the Europe, Middle East, and Africa lab is around pilots. So people have become more familiar with the technology, more comfortable with the technology, and they're now saying, you know what, look, we've done proofs of concept. We kind of know what it can do. We've got a really good use case in mind. So can you help us bring this towards a pilot with the goal that we bring it into production at the maybe Q4 2017 or 2018? Which is amazingly exciting for us, because that opens up and just shows that the technology, in terms of it reaching maturity, is a lot faster than people thought, and it's becoming real. It's becoming a platform, as I mentioned. Like, people are comparing, Salesforce does this. Will blockchain enable me to do that? Will Oracle be able to help me do this, or whatever it may be? So I think that's definitely a big trend. It's going to be the year of the pilot next year, and the technology is maturing. And we're seeing kind of challenges of scale getting addressed. And Owen mentioned this in the call earlier with things like sharding. If we look at kind of the Raiden network, if we look at IPFS, so kind of entities who are looking to, I suppose, solve the scaling issue. So instead of going from 7 transactions a second, like the Bitcoin blockchain, it will be 1 million transactions a second. So I can't wait for 2017 in order to kind of start knocking those scale questions out of the park. So I think hopefully, what else am I seeing? I think another key theme is around regulation, and I mentioned this earlier around, it's pretty amazing to see how progressive some countries are versus others. So I mentioned Hong Kong, but Singapore as well are being really, really progressive. They had their FinTech week a few weeks back, the week after the Hong Kong one. And really interesting to see the work they're doing in the blockchain space. The UK is being super progressive, Royal Bank of Canada, Estonia, I think the Netherlands, Australia with the Australian Stock Exchange. I think the US is getting increasingly more interested in it. And just at a very high level, I think it's fair to say as well that people thought blockchain was a fad and it was going to go away. There was $1 billion invested in blockchain technology between 2013 and 2016. And there's actually 1.4 billion has been invested in 2016 so far. So the fact that people think it's going away, it proves to be the opposite. There's more people investing. There's more eyes looking at this stuff than ever before. So it's a great time to be involved in it, and hopefully everybody else feels the same. In terms of achievements of the lab, so look, we have developed a really cool prototype with Bank of Ireland around regulatory reporting. So one of our clients that we're really kind of focusing and investing on over the coming weeks and months. And as I mentioned, we actually have a new blockchain facility being built that's going to be ready. And there's a launch on January 23rd in Dublin. So if you're in the neighborhood, please drop by. We're going to be launching our prototypes, a piece of thought leadership, and the lab itself. So we're going to have a kind of a blockchain beating heart for Europe, Middle East, and Africa, with a cool new facility as well. So let me know if you're in the neighborhood, and we'll see what we can do to bring you in. Okay, so another question. As you were saying, as of now, it is both necessary to be a lawyer and a technician. For the latter one, which would be the best programming language for starters to begin with, to understand smart contracts? I guess. So I think Solidity is the language basically in Ethereum. And then in terms of the kind of front end area, I think Python and Django were the languages that the team were using. So they're probably where I would start. I think without having Owen, who is as I said, a technical architect on the call, it'd be hard for me to say with total confidence, but certain Python and Django at the front end, Solidity in terms of Ethereum is the language that people are developing in. But I think a really important point on this is that when people kind of say, I want to get into blockchain, but I don't have any blockchain experience, if you're a really good back-end developer, if you have a back-end experience, you will quickly come up the curve in terms of your blockchain experience and your blockchain programming journey. So don't be afraid if you don't have blockchain experience. You're not alone. There are many people out there who don't have experience directly in the area. And if you do, if you are looking, if you're a good back-end programmer and coder, then effectively within a month's time, you'll be doing a pretty good job. So happy to also answer those questions offline when we get Owen back. But honestly, if you're a good back-end developer, it should be no problem to you. And I've got about 3 minutes left. So hold on, what was the next one? So summary of longer question before. So regulation is inevitable. Will this stifle innovation in distributed ledger technology? And how can banks, fintechs, regulators work together to ensure blockchains are implemented safely but still maximize the impact they can have? Okay, very good question. And regulation is inevitable. And I think what I would say at the moment, the approach regulators are taking, it's pretty straightforward, is that they're in wait and see mode. A lot of the regulators that I've met, and I've met with regulators from around the world, HKMA, Singapore, European Central Bank, Bank of France, Bank of Ireland, FCA, all these kind of guys, or Central Bank of Ireland, I should say. They're in wait and see mode. That's probably the key thing. They're effectively saying, guys, when there's a standard around the technology, let us know. And then when that changes the way we regulate or makes things easier as the way we regulate, let us know and we'll evaluate it. But and I think they have quite a practical approach, and they're not trying to stifle innovation. They're just being quite practical. if the use case is around payments, a lot of the central banks will have a payments team that look at how information is processed, received, interrogated, analyzed, and used. And if that process fundamentally changes, so that they don't know what to do with the data and it doesn't help them meet their requirements in helping to protect the consumer in terms of helping provide financial stability, then they're going to be very wary of the technology because it's not going to help them do their job. So effectively, I think they're in a wait and see mode. They're waiting for standards to emerge, and our job needs to, in terms of blockchain enthusiasts, our job is to help them understand what the benefits are. So I mentioned regulatory reporting is one of the key areas that we're looking at within the lab. So our job is to explain to them how they can harness the technology, how they can use it so they can get information much earlier and much more accurate information so they can supervise the banks better and insurers and asset managers and protect the consumer. And on that note, thank you very much, everybody. We are ending. So I just wanted to say thank you very much to everybody for joining the call today. I know we've covered a number of different areas. Happy to kind of pick up on another topic and spend more time with Owen. I think there were a number of really good technical questions that came in there that I didn't get a chance to answer. So if anybody would like another session specifically on the tech front, more than happy for us to facilitate that. But on that note, guys, thank you very much for your attention and hopefully talk again soon. So this is Laurie Keogh from the Deloitte Europe, Middle East and Africa Blockchain Lab in Dublin signing off. Have a great morning, afternoon and evening. Thanks a lot.